Back in 1688, a merchant called Joseph de la Vega became one of the first to lose a fortune on the stock market. He wrote, "It is a touchstone for the intelligent and a tombstone for audacious, a treasury of usefulness and a source of disaster." This quote from 300 years ago manages to describe the mood swings of an investor perfectly. Even though investor behavior is still the same, a lot has changed since then. Those were the times when individuals controlled stock markets, whereas today big players like hedge funds, investment banks, those are the ones who has the most power. Is that changing? These stocks have gained the nickname meme stocks. Wait, what? As in meme? This meme? Yes. A meme stock is a stock whose value can go up wildly beyond expectations and disregards fundamentals like profits, revenue, or even leadership. Over the past years, meme stocks have managed to cause powerful valuation changes in some stocks and created waves in investment circles. Just have a look at Twitter or Reddit and see how much of an impact they have over the financial markets.
And those players are getting stronger because of the social media, and we can't ignore them anymore. Despite they don't have like a professional background, they don't know real analysis, they don't know technical analysis, they don't know a real scientific approach of analyzing any share. They just buy.
For now, meme stocks are not found in textbooks or taught in finance classes, but they are becoming more and more important every day. In fact, look at this tweet, which is half-joking, but reflects the reality at the same time. How do you understand if a stock is a meme stock and what are their characteristics? They're usually overpriced. They experience spikes of rapid growth in a very short period of time. They're popular among millennials and retail investors, and are based on a potential rather than their financial features. FOMO, fear of missing out, is a big motivation to buy these stocks. And hype usually gives direction, while panic selling occurs even during a very small headwind.
The classification's not clear. However, what we do think it might refer to is millennial investors, millennials who are on their social media applications, and the particular brands that they might be interested in investing in. So you would think about Tesla.
Let's have a look at Tesla. Since its establishment in 2010, its shares have surged over 21,000%, and this ever-rising share price has created another meme, stonks. Back in June 2020, Elon Musk tweeted, "Who controls the memes controls the universe." And over the years, Musk managed to create a super loyal fan base who would follow him anywhere, which has been very helpful. Lately, Musk has been tweeting a lot on digital currencies, causing massive but short-lived spikes in prices. So all these stocks, GameStop, Tesla, Netflix, and digital currencies like Bitcoin, Dogecoin, they're all products of memes. Whether they've been successfully surging over a period of time or just had a short-lived moment, they should all be thanking the internet, social media, and memes. Once, a famous Turkish trader told me, "If you hear people talking about a particular stock, run away from it. Don't ever think of investing in it." Is this how most professional traders feel about retail investors? And are retail investors answering this mentality through meme stocks?
There is a new player is coming to the market. It was always ignored for years and years by big Wall Street players. But this GameStop saga, as you called it, is a proof that this new player, we can't ignore it anymore.